Welcome to the Deep Dive. This is Talk Tickers. We're your straight shot, cutting through the chatter of earnings calls to get you the insights that, well, that actually matter.
Yep, getting right to the core.
Exactly. Today, we're diving into Laureate Education's second quarter 2025 earnings call. They're a big name in higher education, especially down in Mexico and Peru.
A major player in those markets for sure.
So our plan today, break down the numbers, figure out what management's really saying strategically, and most importantly, what it all means for you listening in.
Let's get into it. So looking at Q2, Laureate served up some headline figures that looked a bit mixed at first glance, but underneath, pretty solid strength.
Okay, break that down for us. What were the key adjusted numbers?
Right, so the non-GAAP adjusted EPS, that's earnings per share adjusted for certain items, came in at 79 cents. And that nicely beat the street estimates, which were more like 72 cents to 73 cents.
So a decent beat there. And revenue?
Revenue also came in strong, $524.2 million. Analysts were looking for something between $502 and $516 million. So yeah, beat expectations there too.
And what does that translate to in terms of growth?
There's a solid 5% increase compared to last year. But what's really interesting, if you look at it on an organic constant currency basis, basically, stripping out currency swings and M&A, that growth was actually 10% year over year.
Wow, okay, 10% organic growth. That's pretty significant. What about profitability? EBITDA.
Adjusted EBITDA hit $214.5 million. That's up a healthy 15% from last year. And the margin was really robust, 40.9%.
40.9% margin, what?
That's a jump. It is, up 348 basis points, so almost 3.5 percentage points higher than last year. Really strong operational performance showing through there.
Okay, those adjusted numbers sound great, beating estimates, strong organic growth, expanding margins. But there was a catch, wasn't there? The GAAP number told a different story.
That's right, you picked up on it. The reported GAAP EPS, the standard accounting number, was $0.65. And that actually missed the estimates.
Missed. So why the difference? That seems like a big disconnect.
Yeah, it does. It was mainly down to a pretty significant non-cash foreign exchange loss. This was tied to intercompany loans, basically loans between different parts of Laureate's global business.
Ah, okay. So currency fluctuations hitting the value of internal loans on paper.
Exactly. It's an accounting thing, not cash actually leaving the building. But it did pull down the reported net income to $97.4 million, which was lower than the $128.4 million last year.
And how did the market react to this kind of mixed signal? Beat on adjusted, miss on GAAP?
Well, the initial reaction was pretty cautious. The stock was trading sort of flat, maybe slightly down right after the announcement. You could tell investors were, weighing things up.
Trying to figure out if it was real trouble or just that accounting noise you mentioned?
Precisely. And it seems the market leaned towards accounting noise, but it definitely took a moment to digest.
Okay, so beneath the GAAP headline, the actual engine seems to be running well. Let's dig into why. What did management say was driving that underlying strength?
Yeah, the core story was definitely positive. Management pointed straight to solid operating results, driven mainly by continued enrollment growth. That's really the key for them.
Enrollment up. How much?
Year to date, new enrollments were up 7%. And that fit into a 6% increase in total enrollment numbers. So good momentum there.
And what else helped? You mentioned currency earlier.
Yes, that was a definite tailwind. The Mexican peso, the MXN, and the Peruvian sol, the PEN, were both stronger against the U.S. dollar, which helps when they translate those local earnings back.
Gotcha. Any other factors?
They also mentioned some seasonality shifts. Academic calendar changes meant some timing differences in when revenue or expenses hit.
Okay, timing shifts. Does that mean things just move between quarters?
Pretty much. Management was quick to say these impacts would basically cancel out in the second half of the year. It's more about the rhythm of the academic year than a fundamental change.
Right, so not something to worry too much about for the full year picture.
That was the message, yes.
And speaking of the full year, it sounds like they're feeling confident enough to actually raise their guidance.
They did. That was a key takeaway. They lifted the full year 2025 guidance. Revenue is now expected between $1.615 billion and $1.63 billion.
How much of an increase is that?
It's about $55 million higher at the midpoint compared to their previous guidance.
Okay, and adjusted EBITDA.
That got a lift too, now projected at $489 to $496 million. That's a $16 million increase at the midpoint.
So higher guidance. But you mentioned currency earlier. Was this raise mostly FX driven?
Ah, good question. And yes, management was very clear about that. They explicitly said the guidance raise is primarily due to favorable FX.
So not necessarily the core business suddenly performing way better than expected.
Exactly. They actually reaffirmed their constant currency outlook, meaning if you strip out the currency effects, their underlying operational forecast hasn't really changed. The reported dollar numbers just look better because the peso and sol are stronger.
That's a really important distinction. So enrollment guidance, for example, didn't change.
Correct. Total enrollment guidance for the full year is still 491,000 to 495,000 students, unchanged.
Okay, that makes sense. It's a currency boost, not a fundamental operational boost to the outlook itself. What about the next quarter specifically? Q3 guidance.
Right. For Q3, they guided revenue to $379 million and adjusted EBITDA between $78, $82 million.
$78, $82 million. How does that compare to last year's Q3? Sounds potentially lower.
It is lower compared to last year's Q3 EBITDA, yes. But again, they tied this back to timing.
Those seasonality shifts again.
Exactly. They specifically mentioned an expense timing shift into the third quarter this year. So certain costs are hitting Q3 that might have hit a different quarter previously. It's not seen as underlying weakness.
Okay, so Q3 might look a bit lighter on paper due to costs shifting, but it's part of the plan for the full year.
That's the explanation, yeah. Manageable timing.
Got it. So beyond the numbers and the timing issues, what about the bigger strategic picture? Where are they putting their energy, their capital?
Yeah, they spent some good time on that. They confirmed 2 brand new campuses are opening literally this month, September. One's for their Unitech brand in Monterey, Mexico.
Okay, Monterey, big industrial hub.
Right. And the other is for their UPN brand over in East Lima, Peru.
And are these just isolated projects, or is there more planned?
Oh, definitely more. This is part of a clear expansion strategy. They've already got 2 more campuses slated for late 2026 or early 2027.
Wow, okay, so a steady pipeline.
And they said they've identified potential sites for the next 5 years. So it's a sustained rollout.
That sounds ambitious. How are they funding this, alongside other things like buybacks?
Well, they highlighted their disciplined approach to capital. They've bought back $71 million in shares so far this year, and still have about $27 million left on their current authorization.
So returning cash to shareholders while also investing in growth.
Exactly. It shows confidence in their cash flow. They also gave some color on CapEx capital expenditure. They reckon spending about 5% of revenue on CapEx allows them to support that 8-10% annual revenue growth target and launch 1 or 2 new campuses each year.
5% of revenue for 1 to 2 campuses a year plus ongoing maintenance. That actually sounds pretty efficient.
It does. It suggests they've got the process down pretty well, identifying sites, building out efficiently in those markets. It's a deliberate, seemingly sustainable plan.
Okay, so pulling it all together for an investor listening, this call seems to reinforce that Laureate is just steadily executing its plan, right? Despite some noise.
Absolutely. I think that's the main takeaway. They're tapping into really strong demand for higher education in Latin America, especially Mexico and Peru.
And the currency tailwinds are nice, but not the whole story.
Right. Management keeps pointing back to constant currency for a reason, to show the underlying operations are strong. The long-term bet is on growing enrollment, smart pricing, having the right programs. FX is just the layer on top for U.S. dollar reporting.
Makes sense. Did they talk much about the general economic situation in Mexico and Peru? Because that obviously plays a role.
They did touch on that. They painted a picture of resilience, actually. Mexico, they said, is holding up well-stable financial system, decent fiscal management. They even see potential for better GDP growth, maybe in 2026, depending on how U.S.-Mexico trade talks go.
And Peru, wasn't it in recession recently?
It was, but they highlighted it emerged with pretty solid momentum, something like 14 straight months of expansion, 3.1% GDP growth year to date. So recovering well.
And does Laureate see itself as dependent on these economic cycles?
Management stressed their model's historical resilience. Their point was essentially people need education, regardless of the immediate economic climate or political shifts. Demand for quality, affordable higher ed is pretty constant, even growing.
Interesting. Any specific growth areas they highlighted beyond the new campuses?
Yes, definitely. They talked quite a bit about the demand for fully online programs, especially for working adults who need flexibility.
Ah, the digital angle.
Exactly. They've had success with this in Mexico, and now they're really pushing to replicate that in Peru, especially since some regulations changed there recently, making it easier.
Yeah.
That seems like a big focus area.
That online piece feels really significant, potentially higher scale, different market segment.
Absolutely. It could be a major long-term driver, potentially offering better margins down the line compared to just physical expansion. It complements the campus strategy nicely.
And how has all this translated into stock performance? You mentioned the market digested the Q2 news, okay, but longer term?
Longer term, the performance has been really strong. Laureate stock has significantly outperformed the S&P 500 over the last 3 months and the last year. We're talking total returns around roughly plus 26% over 3 months and a whopping plus 89% over the past year.
Wow, plus 89% in a year. Okay, so investors have definitely been rewarding this story. What should people watch for going forward? Key catalysts.
Well, obviously the Q3 results, especially checking if that EBITDA comes in as guided, considering the timing shifts, then keep an eye on those FX rates, MXN and PEN versus the dollar. They still matter for reported results.
Right. And the new campuses.
Yep. How quickly they ramp up enrollment at those new sites in Monterey and Lima. And finally, whether they keep using that share buyback authorization. Those are probably the main things to track.
Okay, makes sense. Right. Let's shift gears. It's time for our not financial advice segment. This is where we brainstorm some, let's call them audacious yet plausible trade ideas. Think hedge fund pitch meeting, but purely for discussion, of course.
Absolutely not advice, just sparking ideas.
Exactly. So, given everything we've heard about Laureate, what's an audacious idea that springs to mind for you?
Okay, my first one. Let's call it the FX overlaid campus growth play. The core is simple. You go long Laureate stock because you believe in the campus growth, the enrollment story, the operational execution.
Right, the fundamental thesis.
But here's the twist. You simultaneously set up a derivative position, maybe using futures or options on a basket of the Mexican peso and Peruvian sol.
Why do that? Hedging. Or something more.
Could be either. You could hedge to protect your Laureate gains if the currencies turn against you. Or if you're bullish on the currencies in the stock, you could use derivatives to amplify that FX tailwind. You're basically betting on the core growth, but actively managing or even leveraging the currency factor that management themselves flag as a big variable.
Interesting. So isolating the operational bet while potentially playing the currency moves separately, I like that. Okay, building on that. Here's my idea. The LATAM Online Education Alpha Hunt.
Ooh, okay. Alpha Hunt. Tell me more.
So again, you're long Laureate. But your focus isn't just the overall company, it's specifically on that ramp up of their online programs, particularly in Peru now that the regulations are favorable.
Betting on the digital transformation angle.
Precisely. The thesis is that the market, which might be more focused on campus enrollment and reported financials, is maybe underappreciating the scalability and margin potential of this digital push targeting working adults.
Okay, makes sense. How do you make it wild or hunt for alpha?
Here's the kicker. You potentially pair the long Laureate position with a short position in a regional competitor, one that you identify as being much less advanced digitally, slower to adapt.
Ah, pair trade. Long the digital leader, short the laggard.
Exactly. You're betting not just that Laureate's online strategy works, but that it drives significant relative outperformance compared to peers who are stuck in the old model. It's a bet on Laureate winning the digital education race in these specific markets.
It's definitely audacious. A focused bet on digital disruption within the region. I like it.
Okay, so let's quickly wrap up this deep dive on Laureate. What are the main headlines?
Well, strong Q2 on an adjusted basis, definitely. Beats on both adjusted EPS and revenue, driven by good enrollment growth and, yes, those helpful FX tailwinds.
And management felt good enough to raise the full year guidance, although we know that's mostly currency related.
Right. But they also signaled clear strategic momentum. New campuses opening, a pipeline for more, disciplined buybacks.
And while there was some noise from that non-cash FX loss and the expense timing shifts,
the underlying operational health in Mexico and Peru looks pretty solid. Resilient economies, strong demand for education, and they're investing in both physical and digital to meet it.
Definitely a lot going on there. Now, just our standard reminder, everything we've discussed today is purely for informational purposes. It is absolutely not financial advice.
Please do your own research. Dig into the details yourself before making any investment decisions.
We hope this deep dive gave you some valuable perspectives on Laureate Education.
Yeah, hopefully sparked some thoughts. Maybe you saw something different in the numbers. Yeah. We always like hearing different takes.
And as we sign off, maybe something to chew on. Laureate's building campuses, pushing online. But how might truly disruptive tech, think advanced AI tutors or fully immersive VR classrooms, change the game for even established players like them in the next, say, 5 to 10 years? Is their current strategy enough for that next wave?
That's a big question for the whole sector, really. Food for thought.
Definitely. Thanks for tuning into the Deep Dive. We'll catch you next time with another earnings call breakdown. Until then, keep digging.